Welcome back. Well, stable for the markets at this point in time, so no problems really coming in. Mid-cap index, which is up around 0.8%. Good, steady advance decline ratio on the advancing side, so around almost 1,300 stocks, just shy of that, advancing to around 827 stocks declining. So around 2:1 is where the ratio stands. But let's focus on some stocks then, or some news after the recent SEBI nod for the SBI Cards IPO. Sources now tell CNBC-TV18 that SBI is to file papers for the issue with the RoC today itself. Yash has all of the details on this. Yash.
Well, absolutely, Ekta. It was recently that market regulator SEBI gave its in-principle approval to the IPO of SBI Cards, which is the cards business of State Bank of India. And what we're given to understand, the latest here is that the State Bank of India has filed the papers for the cards business as far as the IPO is concerned with the Registrar of Companies. Now, as far as the approval process goes, this would be the final approval before the company can actually launch the IPO for the cards business. Just to speak about the timeline of the issue, the State Bank of India is expecting to launch the IPO for SBI Cards between March 2nd to March 5th. As far as the total dilution is concerned, a total of 14% is likely to be diluted through this IPO. Out of that 14%, 10% is likely to be diluted by Carlyle Group, which is the private equity player, and the balance 4% by State Bank of India. Speaking about the valuations, what banking sources are indicating is that the per share price of SBI Cards is likely to be between 745 to 775, which essentially values the company at 69,500 to 72,000. Of course, a simple calculation will tell you that by diluting 4% stake through SBI Cards IPO, State Bank of India would be raising anywhere between 2,780 crore rupees to 2,880 crore rupees.
Okay, thanks a lot for that. SBI Cards IPO is it's really much awaited. The 9,000 crore IPO has garnered so much interest well before its launch itself. But early March is when the launch will take place. Thanks, Yash, for that. Mitesh Thakkar of MiteshThakkar.com joins in now to give us some cues on the market, which is, by the way, picking up a bit of pace. Mitesh, hi, morning. The stock of the moment undoubtedly is Aurobindo Pharma, so I have to start with that. 19% higher now. You think there's more to go technically above the 600 rupee mark?
I think it's still not done. The breakout has clearly pulled a lot of indicators on the upside, suggesting momentum could still be there. I think the extension targets on the upside are between 630, 645. So I think that range, which is about 8% higher from here, 7 to 8% higher from here, I think should be tested. So maintain a positive bias on Aurobindo Pharma. That about, I think, on the index, my belief is that we are not doing much. It's just a phase of consolidation, and we might just do a range of 11,920 to about 12,250 without actually breaking out in the near future.
Okay, so that's on Aurobindo. But in general, Mitesh, are you much more positive on pharmaceuticals? I mean, look at the kind of rally a Wockhardt is seeing, or maybe even like an IOL Chemicals, Jubilant Life is higher.
See, I think, it's a divided pack here. I think Sun Pharma, Lupin still look weak to me. Glenmark is not going anywhere. Small caps like Granules are doing extremely well. Wockhardt, I think, looks like a trading buy. So it's a very divided house. I don't think there's a clear-cut trend in the sector or the sectoral index per se. But I think between the entire lot, I think Aurobindo Pharma, with the kind of news flow and the breakout today, I think has clearly more potential of upside in the near future.
And what about your own stock ideas, Mitesh? At this point, what are you advising your clients, our viewers to buy and sell?
A couple of names. Nestle, I think, is showing continuation. So buy with a stop at 16,600 for targets of 17,200. And Havells is a buy. Keep a stop at 610 for targets of 630.
Okay. All right, Mitesh, we're going to let you go on that note. Thanks very much for joining in. Well, it seems as though definitely pharma is the flavor of today and maybe the week. The government is going to hold a meeting today to discuss various options for domestic manufacturers of critical APIs in India, which India is critically dependent on when it comes to imports of them. Timsy is here to give us all of the details on the agenda of the meeting. Timsy, there are lots of high-level industry officials who are a part of this meeting. Can you give us a sense in terms of what we can expect?
Yes, this is a typical meeting, especially keeping in mind the contextual issues, especially when it comes to coronavirus. Because the outbreak of the virus, especially in the Wuhan and Hubei province, which is the main area from which India imports APIs, is actually under consideration. As you said, almost top 14, 15 pharma majors of India are going to be a part of this meeting, which has been called especially by the Niti Aayog. Amitabh Kant is going to chair the meeting along with key secretaries, including those from finance, from environment, from pharma to chemicals, to also the officials from the areas where already there are API manufacturing in India, that is in Andhra Pradesh, etc. All these people will come together to discuss how to reduce India's dependence on imports of critical APIs, because India imports about 80% of its APIs which are used in drug manufacturing in India. India also looks at exporting these drugs after the import of these APIs. So this entire meeting is to see how India can become self-dependent on manufacturing of APIs over the next few years, so that dependence on China gets reduced. And yes, not to forget, industry is definitely going to ask for a lot of breaks that they need, a lot of clearances, fast-track approvals, which are needed to try and revive the API manufacturing in India. Let's see what happens when the meeting begins. It's scheduled at 2 p.m. We'll keep you posted.
Okay, thanks a lot for that, Tim C. Well, on to another exclusive from the sidelines of the 17th BioAsia Convention. My colleague Archana Shukla happened to catch up with Biocon's Kiran Mazumdar-Shaw to get her view on the likely suggestions from the pharma sector to the government on account of the coronavirus outbreak and the centre's decision to stall API supplies from China. Do remember, the centre has called for a meeting with the industry heavyweights to discuss the road ahead for the sector amidst the flaring spread of coronavirus and the need to contain it.
We need to be in a state of preparedness, and that state of preparedness starts with screening people, with making sure that all visitors entering India are properly screened, and I think that is happening at our airports. And I'm sure it's happening at all entry points in India, which I think is the first step that we need to take. I think today with technology you can very quickly do sort of thermal profiling, and it's easy to pick out people who are down with fever, and then it's easy to quarantine them and make sure that they don't have the virus. We need diagnostics first and foremost. I think you need to diagnose the virus ASAP, so so that you don't inconvenience people if they don't have the virus.
In an outbreak and an epidemic situation like that of coronavirus, the COVID-19, do you think the government has been on its feet in terms of containing the crisis and in terms of also stepping forward and having dialogues and discussions? You initially said that we should not be banning export of drugs.
India is very serious about containing coronavirus, and it has taken a lot of good steps. The Ministry of Health has responded very rapidly to the coronavirus threat, but I'm not so sure that we should just have a blanket ban on exports. I think we really need to look at every one of those essential medicines and look at what percentage of imports from China do we really rely on. I mean, paracetamol, I don't think will have a Chinese import constraint. So I think we need to look at some of these drugs that are unnaturally sort of having these price escalations only because people are taking advantage of a threat, of a crisis. So I think we really need to look at what is it that we really need to be careful about in terms of banning exports, and what is it that really is just an artificial price increase.
Okay. In your sense, how much time would the Indian industry need to kind of get its hold back on the situation as far as the shortage of API and intermediaries is concerned?
We are not in a bad position, but we are in a critical position in the sense that if we don't do things and if we continue with business as usual, we might be in for a rude shock. But I think if we start taking steps now, and that is why I think I commend the government in being proactive, and if we start providing support, freeing up capital, and making sure that companies that have the capabilities of providing some of these drug inputs then I think we may be able to overcome this serious challenge that we are now looking at in the next 6 to 9 months.
All right, that's the word coming in from Kiran Mazumdar-Shaw. Let's take a quick break on that note. On the other side, we'll discuss market fundamentals with Jigar Mistry, the co-founder of Buoyant Capital.